they completely missed what I think was the biggest story, which was basically China leapfrogging the West in industry after industry.
Hi, Louis. Thank you very much for joining us today. How are things in Hong Kong?
Things are good. Thanks a lot for having me. Things are dark, as you can tell outside. But yeah, things are great. Good to be here.
So, I want to focus our discussion today on the US and China. And together, these two economies represent 50% of the global GDP. So, what happens in these two countries impacts the entire world. And you and your team have done a lot of research on China and the Chinese economy. What's your view of the Chinese economy right now? And have the policy changes that were announced in September and October of 2024, have they had a positive impact?
So how much time do you have? Because just putting a coin in that machine, I could ramble on for hours. But look, I think the way to conceptualize the Chinese economy is you had an economy for roughly 20 years that was a real estate driven economy for all intents and purposes. You had 20 million people moving from the farms to the city every year. Um, and that required a lot of infrastructure investment, a lot of real estate investment, and that drove a very strong growth rate. Um, and in 2018, I think this model was basically completely torn apart by the U.S.'s decision to stop the export of semiconductors to China. And when that happened, the Chinese leadership basically freaked out and they thought, okay, the US is preventing us from growing. It's semiconductors today. Tomorrow it might be, auto parts or petrochemicals or you name it. We have no choice but to become self sufficient in pretty much every industrial vertical. And so the government told the banks, look, banks, no more loans to real estate. And from now on, you're only lending to industry. And so you had a period of, roughly 6, 7 years, 2018 to today, where loans to industry shot up and loan to real estate collapsed. What I think every foreign commentator focused on was the collapse in real estate, because for 20 years, the growth had all been about real estate. But also because we'd gone through a real estate bust in the Western world. So everybody's like, oh, I've seen this movie before. I know how this is going to end. And while they were focusing on the real estate bust, they completely missed what I think was the biggest story, which was basically China leapfrogging the West in industry after industry. Where we're seeing it very blatantly today is in autos, but it's also true in industrial robots. It's true in solar panels and nuclear power plants and batteries, you name it, trains, road building, tractors, you name it. China is now producing at a quality level that's often usually better than the West, and a fraction of the price. And that's a much bigger challenge for our economies. Now, I think having basically achieved now this industrial independence, China can now afford to relax a little more. So you had 6 years where it was, like I said, all the money has to go to industry. It was almost like being on a warpath footing. And now now that they've gone to the point where they've leapfrogged the West, it's like, okay, we can relax a little bit and we can have some subsidies to consumers. So now you've gone from real estate driven market to industrial driven market, and now you're trying to shift to boosting consumption. And so you're starting to see a lot more stimulus on the consumption side. You're obviously seeing absolute collapse in interest rates, which makes consumer loans, mortgage loans, etc., much more attractive. You're seeing a bunch of measures taken to make real estate pick up again. Things like, it used to be you needed to put 30% equity down to buy a house. Now it's only 10%. And so you had a huge transition in 2018, and I think we're starting a new transition again today. Long-winded answer to your question.
That's a great backstory. And a couple of comments. First of all, I find it interesting that you say China's trying to become self-sufficient now, because every country in the West is trying to do the same thing, especially the US. And they realize this, especially after Russia invaded Ukraine, that they were reliant on a lot of these other countries for a lot of resources. And the other comment I would make is I think China has done an exceptional job of just being way ahead of the curve compared to countries in the West. And I look at EVs and also lithium ion batteries. If you're a EV manufacturer, you have to go to China to get these lithium ion batteries because they're the only ones with the technology to do so. And they were working on that 10, 15, 20 years ago when nobody else cared about it. And I look at what's happening right now with the nuclear energy and also uranium. They're doing the same thing. And they have the world's largest nuclear reactor build out in the history of mankind. They're building 150 reactors between now and 2035. And they virtually produce very little uranium, but they're acquiring all this uranium right under the noses of all these Western countries. And so there's
Yep.
another industry that they're dominating.
Well, they have the advantage on that. Sorry to interrupt you. Their next door neighbor, Kazakhstan, is, there's two big uranium producers in the world, right? There's Canada, and then there's Kazakhstan, and then there's, a bunch of African countries who also produce some. But so they're next door to, to one of the biggest producers, so that helps. It helps, and what China's been doing in with Kazakhstan, with the countries in Central Asia, the countries in Southeast Asia and elsewhere, is coming in, building infrastructure, and the idea being pretty simple. It's the story of every empire through history, as you build roads to bring in commodities cheaper, transform them into higher value added goods, and then export the goods again. Um, those goods might be cars, or they might be batteries, as you point out, or they might be solar panels, or whatever they might be. Um, and that is, again, the story of every empire. Every empire fundamentally is a road building exercise. That's why in Europe, I'm French. In Europe, we say all roads lead to Rome, because that's what empires do. They build roads. And today, China, as it's not that it's taken over Kazakhstan, it hasn't. Uh, but China's presence into Kazakhstan is multiples of what it was just 10 years ago. And on this, if you're interested in this, one of my colleagues, Tom Miller, who's been working at GAFCAL for 20 years, went around all the Central Asian countries and looked at the various projects. And he wrote a really fun read about it, fun book. And so I'll plug his book. It's called China's Asian Dream. And it's a very fun read. It's like it's a bit of a travel book, but going to places like Kyrgyzstan and Tajikistan, or like places that most people would struggle to put on a map, and basically explaining what China was doing in all these places. I recommend it.
I'll be sure to check it out. I think one of the big issues with countries in the West is that we have these new governments every 4 or 5 years. And so there's no constant direction. And if you look at the US economy right now, of course, we had the Biden administration. They pushed forth this Inflation Reduction Act, and they allocated trillions of dollars toward renewables and solar and wind, and I guess a little bit toward nuclear. But now you have the Trump administration, and they're going in the completely opposite direction. So I want to ask you a little bit more about China. And
Can I interrupt you
one of
there?
the key,
Sir, can I
yes, by all
interrupt you
means.
there on this? Because I think I'm smiling because one of the jokes in China is that in China we don't change politicians, but we change policies. And in the West, they change politicians, but they never change their policies. They still end up with the same healthcare policies. They still end up with the same agricultural policies. They still end up with the same foreign policies. They still end up with the same energy and environmental policies, almost regardless of who you vote for. Now, in fairness to your point, I think that's been true for like quite a while. That in essence, it didn't really matter who you voted for. The policy was driven by essentially a government bureaucracy that just sort of churned on. This is the big question, of course, today with the U.S. Does Trump upend all this? Now he promised to upend all this back in 2016 to drain the swamp and to bring power back to the people and all that stuff. Very Andrew Jackson like, and he didn't do it. So it'll be interesting to see if it happens this time. But I think actually in China you actually get changes of policy. You don't change the policymakers, but you change the policies. In the West, you know, what's what's the difference in the, say, the U.S. healthcare policies? Like U.S. healthcare has to be one of the biggest challenges, or for that matter, healthcare is a huge challenge in Canada, and it's a huge challenge in the UK, and it's a huge challenge in France. And tell me the difference between the various politicians of the past 20 years in terms of their healthcare policies. It's always been the same.
Hi, I hope you're enjoying the discussion with Louis Gave. There's so much happening in the world right now, especially when it comes to geopolitics. And if you need help understanding how these events will impact your financial future, consider having a discussion with a professional financial advisor. You can find out more information at wealthion.com/free. Once again, that's wealthion.com/free. Now, back to the show. I guess the point I was trying to make is that the government, let's just say in China, they're going to say, okay, lithium ion batteries, we're going to spend 10 years or 15
Yep.
years building this technology out. Whereas in
Yep.
Canada or the US, you're never going to get that because every government has their own ideas. So they're never going to pick one course and then go with it. And
So
that's
on
where I
this,
was going.
yeah, no, I'm sorry I keep interrupting you. I'm being super rude. It's your show, and I keep busting in. I apologize. And so I guess what you're pointing to is sort of industrial policy, right? It's the way that China says, okay, you know what, we're going to be doing EVs, or we're going to be lithium ion batteries. Um, Now, I think the way this is perceived in the West is that the government decides to do EVs and like does a bunch of subsidies, and then you get an EV market out of the ground. But in fact, Chinese capitalism works a little bit differently. It doesn't work exactly like that. What happens in Chinese capitalism is that Xi Jinping at the top says, "Hey guys, the future is EV, and we got to produce EVs." And then basically every mayor of every major town, every provincial governor, every party secretary picks up his phone to his local bank and says, "Hey, bank, Xi Jinping, the big man, just said we need to do EVs. So you're going to give a loan to my EV maker." And before you know it, you actually have 130 EV producers in China, which is what you have right now. You got 130 guys that are all very well funded by the banks. Um, and then starts what I've come to call the Hunger Games of capitalism, of Chinese capitalism. You got 130 guys, and they're just going at each other's throats. And eventually, you have 4 or 5 who survive. And this happened in the lithium batteries. That's exactly how it happens. Like, oh, we need to be better in batteries, and 150 guys get funded, and only 5 survive. Um, and now the consumer is the end winner of this, because the consumer gets a cheaper car at a better price, and a better car, because to survive you have to put together the best car. Um, the end losers, of course, are all the banks and the private savers, because the way the system works is because there's capital controls and there's basically financial repression. People have no choice but to put their money at the bank, and the banks can then turn around and lend this money on competitive terms to businesses that are always in structural overcapacity. Um, and so it's a very different system. Um, so the way we do it in the Western world is we say, okay, you know what? Electric cars, that's the future. So either we're going to give subsidies for people to buy electric cars, or we're going to subsidize that. We're going to pick a winner, i.e. Tesla, and we're going to give Tesla a bunch of subsidies. And the end result is Elon Musk, is worth whatever it is, $200 billion. I'm picking the number out of thin air. I don't know, but I think it's somewhere around there. Elon Musk gets to be $200 billion. And instead of having electric cars that are sub $10,000, which is what there is in China, you want to buy a Tesla, it's $50,000. Um, and so it's just a different way to do things. One of them definitely is very attractive to, I would say, top end businessmen, to shareholders, and the other is very attractive to consumers.
Interesting points. So I want to ask you about the Chinese consumer now. In the US, the consumer represents 70% of GDP. What's the comparable number in China, and how would you characterize the health of the Chinese consumer right now?
Um, so that's a tough question. It's a tough question because I think fundamentally you're comparing apples and oranges. comparing apples and oranges because, out of that 17%, you have like 18% for healthcare, right? Um, in China, it's less than half that. Um, but then you think, okay, um, it's now you could say, yeah, you get much better healthcare in the U.S. But then you look at the matrix, and you get a better life expectancy in China now than you do in the U.S. Even though China spends a fraction of what the U.S. spends. So you're comparing a lot of very very it's very different things. So the reality in China is that you've just had, like I said, a 6 or 7 year transition where all of the focus was on building up industrial capacity, um, and that brings you to today, where the industrial capacity has far outpaced the consumption capacity. So China, we're talking about cars. Um, China is producing today roughly 6 million cars more than it can consume. Uh, and, it's consuming roughly 34 million cars. It's, it could produce 40, but actually it could probably produce 45 or 50 if it really wanted to, if it was working flat out. So you've got this excess capacity and this underutilization of industry. Um, and most people look at this and say, well, it's not, China's not consuming enough. Now, the reality is China consumption growth has continued to continue to click on. China today consumes twice as much beef as the United States. It consumes 8 times as much fish as the United States. It consumes 3 times the number of smartphones per year that the United States consumes. It consumes, roughly 2 times the number of cars, so on and so forth. So, uh, but if you put relative to the production capacity, there's a lot. There's room for consumption to pick up. No doubt about it. And I think that this is what a lot of the stimulus you're now seeing is about. Is to basically get consumption picking up. That's you've gone from a focus of amongst policymakers of we need to be self-sufficient industrially on everything to now all of a sudden the focus being we need to boost consumption, and that's fairly recent. The real, like, the first time the policymakers really came out and said we're going to need to boost consumption here was in September of 24. So was that 5 months, 4 or 5 months?
So, as you alluded to, China is a large exporter. It has the world's
Yes,
largest trade surplus, growing at 100 billion a month. So, I believe the number's over a
that's
trillion
crazy.
dollars.
Yeah,
It,
it's nuts. It's
massive
nuts.
number, but maybe you can just speak to that and what this is going to do to the economy. And I guess I also want to know where that excess money is going to.
Yeah, I think that's a great question. I want to know it as well. I was hoping you'd tell me. Um, so, look, the reality is today for me. So right now, as you point out, China's running maybe 1.1 trillion trade surplus per year. That's probably going to be the number for 24 and for 25. Uh, to put things in context, up until a few years ago, until China started to reach these kinds of numbers, the biggest trade surplus you'd ever seen in the world were $200 to $300 billion. Japan at their top, Germany at their top. So this is an enormous outlier. Um, and logically, what should be happening, the fact that China's running these massive trade surpluses tells you that the industry there is super competitive, which we know. They're producing great cars for $10,000. They're producing phones that are much better than Apple's for three-quarters of the price. And like you go right now, if you want to book yourself into the Four Seasons in Shanghai or Beijing, it's going to be $200 a night. It's like the economy is super super competitive. And and yeah, and most foreigners who go visit, there's not a lot of them who still go visit, but most of them who do are like, wow, things are so cheap, and everything works, and the trains are on time, and they're clean. Relative to what China was 15 years ago, it's literally night and day. So you've got usually what should be happening for an economy that is that competitive is, the guy making shoes for Nike, should be earning money, and he should be turning around and building another factory, or he should be just turning around and buying local assets. Historically, that's what happens, and as he does, the exchange rate goes up, local asset prices go up, domestic consumption picks up on the back of a stronger currency and a stronger asset prices, and as the exchange rate comes up and consumption comes up, the trade surplus abates, and that's sort of how nature heals itself. That's how the invisible hand sort of fixes things in the background. I think what's happening in China today is all these entrepreneurs who are making very good money um, live in a world of absolute and utmost uncertainty. They have uncertainty internationally, of course, where they don't know, oh, is Trump going to do 60% tariffs? Is he not? Is Europe going to do 60% tariffs? Is he not? Are we going to get sanctioned because we're trading with Russia? Are we not? So they're dealing with like this huge uncertainty. But then even domestically, they've gone through 5 or 6 years where they felt that instead of helping them, the central government kept tripping them up. You had the real estate crackdown and the tech crackdown and the education sector crackdown, and then three years of COVID lockdown. And so even their own faith in their own government has been seriously tested. So, I think most entrepreneurs, most business people, uh, they just want to know the rules of the game and then they get on with it. They just want to know, okay, what are the taxes going to be? What are the regulations going to be? And then from there, they decide, okay, I'm going to make that investment or I won't. But if they don't know what the rules of the game are, then they sit on their hands. They wait and see. So right now, all these guys are making tons and tons of money, and they don't know what the rules of the game is going to be for the next 6 months, 12 months, 2 years, 5 years. So they get all this money and they do one of three things. One of them is they buy gold, and you can see China's gold imports going up and gold prices going up in spite of rising yields in the US and rising US dollars. So number one, they do that. Number two, they keep their cash offshore if they have an opportunity to do so. So you look at Hong Kong as an example. In the past 18 months, US dollar bank deposits in Hong Kong have grown by $220 billion. I mean, that's a lot of money. Hong Kong is a tiny, we're 8 million people here in Hong Kong, or 7.7, and it's a small place. 220 billion, it's a lot of money. And so you're seeing a huge surge in deposits. And then the rest of the money, I think, is coming back to China. And to be honest, just sitting at the bank. And at the banks have nothing to do with it because there's no demand for bank loans. The banks have nothing to do with it but buy Chinese government bonds. And so Chinese government bond yields go down every single day. And so I think a lot of, some of the anomalies that you see out there, i.e. gold doing well in spite of a strong dollar and rising treasuries, Chinese bond yields collapsing even as US treasuries soar. A lot of these things are linked to the recycling of this just gargantuan Chinese trade surplus, combined to the lack of confidence today amongst Chinese entrepreneurs.
You didn't mention real estate in Toronto or Vancouver.
Well, no, in the old days, no, you're absolutely right. So in the old days, if I was a rich Chinese guy, I did buy real estate in Toronto and Vancouver, or in Sydney, or in London, or or LA, or San Francisco, lots of different places. Although you're right that Toronto and Vancouver were very high on the list of places to buy real estate. I think this has been shaken by a number of things. Of course, Canada started to put tax on foreigners trying to buy real estate in Canada, started to put taxes on buildings that were left unoccupied, but perhaps most importantly, what really shook the Chinese faith in let's keep buying Vancouver and Toronto was the seizure of the Russian assets. Right when the combined Western world said, not only are we going to seize the assets of the Russian government, which was one thing, but we're going to seize as well the assets of all the Russian oligarchs. If you're a rich Chinese guy and you own a house in Vancouver, you think, hold on, if tomorrow Xi Jinping decides to invade Taiwan, something I have absolutely no visibility or influence on, then the Canadian government is going to confiscate my house. I bought this house in case things went bad in China. And now you're telling me in case things go bad in China, I'm going to lose it? So this house isn't what I thought it was. it's not, it was my sort of safe money, my fallback in case things go really bad. And what you're telling me, if things go really bad, I lose it. So all of a sudden, I'm not that interested in it anymore. And so I think you have seen, a lot less Chinese money being, with $1 trillion trade surplus. To be honest, the Vancouver real estate market should be going nuts. It should be going absolutely bananas. So should Sydney, and so should Auckland and Toronto. But it's not, because that recycling into Western real estate, I think, has really stalled following the Russian confiscation of assets.
And it's amazing to see this trade surplus grow in the past 8 years when this Cold War has been going on between
Yeah,
China and the US. So who are they selling all the goods to?
yeah, I think that's a super important point you just made there. Is 6, 7 years ago when we said, okay, we're going to block China from getting semiconductors. Well, we didn't say it; it was the U.S. who said it. When the U.S. said we're going to block semiconductors to China, um, the idea was to basically de-Sinify our supply chains, to say China's a bad actor, we're going to trade less with them. Back then, the trade surplus with China was roughly 250 billion a year. Now it's 1 trillion. So the whole idea that we're going to de-Sinify our supply chains and make China less relevant in the global trade equation has been a complete and utter failure. I think if policymakers were ranked on results, uh, that has obviously failed. That should be an F. You get an F grade for your attempts to isolate China. Because in what's happened, to answer your question, what's happened in the meantime is that China's growth into other emerging markets has gone bananas. And today China exports more to emerging markets than it does to developed markets. In fact, China now exports more to ASEAN countries, Indonesia, Malaysia, Philippines, and the like, the Association of Southeast Asian Nations. China exports more to ASEAN than it does to the United States. And what's fascinating is that the export mix of China. So now, it's like 55% emerging markets, 45% developed markets. Emerging markets are growing very fast. So pretty soon, in a few years, we'll be at like 2/3, 1/3. Um, and what they export to emerging markets is higher value added goods that are higher margin. It's the cars, it's the nuclear power plants, it's the railroads, it's the turbines, it's the industrial robots. And increasingly, what they sell to the developed markets is increasingly either Apple, um, other consumer electronics, which are very hard to move somewhere else because it's, complicated supply chains, etc. Or increasingly, frankly, the pretty low value added stuff, the shoes, the Tupperware that you buy at Walmart, uh, the cotton socks that you're probably wearing right now, the like all that stuff that you find at in the big box stores all over the U.S. and Canada. That is increasingly that China knows it's going to lose gradually, like the plastic toys you buy for kids over Christmas. All that stuff is going to be moving to um, to Vietnam, to Indonesia, to Bangladesh, to wherever else. China knows it's going to lose that. So when the U.S. says, "Hey, we're going to do big tariffs," I think China increasingly is like, "Okay, so you're going to tariff Apple, sure, have at it. That's your issue. You're going to tariff all the consumer electronics. Okay, that's a bit of a bummer, but we know that can't move because it's complicated supply chain, so that's not going anywhere either, and it's definitely not coming back to the U.S. And you're going to tariff all the low value added stuff that we were destined to lose over the next 5 to 10 years anyway. So maybe we lose it a little faster, but we don't really care because our future. I'm talking like if I'm Chinese, I'm not, but if you're Chinese, you think our future is not selling Tupperware at Walmart. Our future is selling BYD cars to Brazil. It's selling long-haul machinery to Indonesia. It's selling nuclear power plants to Saudi Arabia. That's what, if you're the Chinese Ministry of Commerce, that's what you care about, much more so than selling Tupperware at Walmart.
And now that we have a new administration in the U.S., do you see things improving? You're probably quite familiar with the cabinet. Are there a lot of hawks on the China? Are there a lot of China hawks on the cabinet? And do you think Trump will want to renegotiate the trade deals?
Trump will definitely want to renegotiate the trade deals. Absolutely. Trump loves negotiating trade deals. I mean, he said it. When you went to Joe Rogan he was asked, like he says, you're 78 years old, 79 years old, I can't remember, but why are you still doing this? And he said, look, he said, what gets me really excited is negotiating great deals for America. So I think that's how he sees himself. That's how he likes it. So there's no doubt he's going to want to sit down with Xi Jinping and hammer out some kind of deal. Now, the bigger question is Xi Jinping going to be interested in a deal? Um, I think there's a fair amount of bad blood that's happened over the past 8 years. China's felt very targeted by the U.S. I think it's easy to criticize people. The old Steve Martin joke: you can't criticize anyone. Well, before you criticize anyone, you should walk a mile in their shoes. Like this, when you criticize them, you're a mile away and you have their shoes. But when you look at China and from their point of view, the US messed up massively with the mortgage crisis. The world almost imploded. They came in and they did a big stimulus, which almost saved, which in their view basically saved the global economy, got the global economy back on track. They did this they took a lot of risks. They put on more debt, and it also led to a lot of corruption in China. But they feel like in 2008 we were good global responsible citizens, and then the U.S. turns around and plants a knife in our back. Now, I'm not saying I agree with this view, but I'm just saying that's how they view things. So, how keen will they be to have a deal? Especially since, remember, they've spent really the past 8 years cushioning their economy from potential U.S. attacks. So they may very well feel, look, you want to tariff us? Have at it. We don't care. We don't care all the more since I think deep down they know that 8 years ago, what everybody was worried about was deflation. Today, what everybody's worried about is inflation. And politically, can Trump really surf on a wave of higher inflation? To the extent that he got elected thanks to a wave of higher inflation. You saw that in Americans who earn less than $50,000 a year, you had a 16 percentage point swing from Democrats to Republicans. And what drove that swing was first and foremost inflation. So I highlight this because, it'll be interesting. I think Trump will want to sit down, will want to make a deal. How interested China will be, I think that's up in the air.
And we have this back and forth going on with TikTok.
Yep,
So right now, TikTok is still operating in the U.S. Trump gave it, I think it's a 75-day
that's right.
break. But do you think he's going to use this as a bargaining tool with the Chinese?
I think if you're Xi Jinping, you don't give a hoot about TikTok. I mean, the ownership of TikTok is 60% US VC firms. It's 20% the staff, mostly based in the US, incidentally, and 20% the founders. Now, TikTok is a global business. If they have to shut down the US, I think if you're Xi Jinping, it's like, what do I care? It's absolutely no skin off his back. Now, I know the perception in the U.S. is, oh no, but it's like a tool of the Chinese Communist Party to control the minds of our youth, so on and so forth. So if you believe that, then you think, okay, what's Xi Jinping going to do? There's still no reason to give it to the U.S. So the whole if you do a deal with us, we're going to give you TikTok. I think if you're Xi Jinping, what do you care? If American VCs that are again own 60% of the company have to take a huge hit, I don't think it prevents you from sleeping 1 minute less than you would have otherwise.
Interesting. Okay,
And
so
by the
in the
way,
past,
if you're Xi Jinping, just on TikTok, if you're Xi Jinping, in fact, you might want to go all the way through and say, because then you show the world, look, these guys, like America pretends that they're the land of business and that they're the land of free trade and that but as soon as you go over there and you're successful, they try to steal your business from under you. And then if you don't give in to their terms, then they shut you down. So, you know, how really is it really the land of capitalism that it claims to be? So, I think for Xi Jinping, he might actually rather close it down. It'd be a better propaganda coup for him than selling it to the U.S.
So, in summary, it sounds like things are definitely improving in China. And in the past, you have said China was the most undervalued market in the world. Do you still think it is?
I think it is. It's less undervalued. I was just in Oslo, and one of my slides in my presentation is the performance of the big country ETFs, so Japan, India, etc. So last year, the SPX, the S&P 500, essentially, was up 24%. Um, the FXI, the biggest Chinese ETF, was up 28. So I asked this. I'm in front of a room of big, and now granted, it's after a terrible 22 and a terrible 23. But I asked this room of big pension funds, like there was about 100 Scandinavian pension funds. And I asked, how many people here knew that China last year, Chinese equities, the FXI actually outperformed the SPX. And out of about 100 pension fund managers, only one put his hand up, which told me that not only are they not invested in China, they're even looking at it, which I find interesting. So it is less undervalued than last year. It's gone up, but if you take a step back, what do you have in China? You have a market that is basically in the bottom quartile of its valuation at a time where all of a sudden the policy uncertainty has been lifted. The government since September has been very vocal of, look, we're going to keep throwing money at this until the economy picks up. We're going to do fiscal stimulus. We're going to do monetary policy stimulus. And at the same time, and they're doing the monetary policy stimulus because bond yields are falling every day. Now, why are bond yields falling? Because the PBOC keeps buying Chinese bonds. Like their balance sheet is exploding. It's like going through QE, just like we did in 2009, we being the Western world, just like we did in 2009, 2010. So they're going through QE. And so, I look at this and I think, okay, I have the opportunity of buying a cheap market with policy support and at a time when the differential between the dividend yield and bond yields has never been this high. So I know that every Chinese pension fund, insurance companies, etc., today has to sell bonds and buy equities. Meanwhile, I look at the US, and in the US, I have a market that's in the top decile of valuations. I have massive policy uncertainty because, you know, I have no clue what Trump is going to do. And more importantly, I also have no clue how the Fed is going to respond to whatever Trump does. So there's really two levels of uncertainty. Meanwhile, I've got bond yields that are going up every day. And what's fascinating to me is everybody's like, oh, yeah, you want to buy the market where bond yields are going up every day, and you want to sell the market where bond yields are going down every day. And I'm like, well, actually, that's not how it works. Like falling interest rates is a pretty strong tailwind for asset prices. Rising interest rates are a pretty strong headwind for asset prices. So yeah, personally, I'd rather buy the cheap market with falling interest rates and policy support every day of the week and twice on Sunday.
Okay, so you just mentioned that the U.S. economy is overvalued, and I was going to ask you about that because when you look at the U.S. economy, the Q3 GDP number just came out. It was revised upwards for the third time to 3.1% from 2.8%. I never understand these revisions. They happen all the time with the government. But also, the most recent non farm number came in very hot. 256,000 jobs were added versus expectations of 155,000 jobs. And you also made mention of the fact that with the Trump administration, there's a lot of unknowns. We don't know what they're going to do with taxes and tariffs, deregulation, deportation. But those elements I just mentioned, a lot of people are saying they can be inflationary. Do you see a threat of inflation heating up in the US? And so instead of cutting rates in 2025, maybe rates are left unchanged. Maybe come Q3 or Q4, they lift rates. What are your thoughts?
Look, I've been an inflationista for quite a few years. And simply put, the way I look at it is, I love Jacques Rueff's definition of inflation. Jacques Rueff was he was a famous economist in France, but he was also De Gaulle's economic advisor, and he was the one who advised De Gaulle. He was looking at the twin deficits in the U.S. He was looking at the guns and butter policies of Johnson. Funding the Vietnam War plus the Great Society, and he said, look, they better repatriate our gold. which the Americans were really upset at the French for. Um, but so yeah, we basically brought all our gold back. Um, and Jacques Rueff used to say, inflation is subsidizing expenditures that give no return with money that does not exist. And to be honest, I think there's been we've done a lot of that in the Western world in recent years. Um, look at it this way. Today, you mentioned the very hard non-farm payrolls. Like, for all intents and purposes, the U.S. is running at full employment, right? I mean, if you want a job, you can find a job in the U.S. today. And unless you're in a very, there's a few regions that are perhaps, struggling, but by and large, in the U.S. today, the job market is super tight, and you're running budget deficits of 7.5% of GDP. It's absolute menace. In recent years, you've gone from 5.5 to 7.5% of GDP. Massively pro-cyclical fiscal policies. So yeah, you got to pay it somehow, and the way you end up paying it is through inflation. So yeah, I absolutely do remain um, an inflationista, and the way I look at it is we're still far from the Fed's 2% target. The Fed started cutting for the first time. Usually, it never cuts until the inflation gets to 2% or below. Uh, this time around, basically, the Fed started to cut. The inflation was at 2.6. Um, the message the Fed sent to the market, I think, was 2% used to be the ceiling, and it's now the floor. As we get close to 2%, we start to cut. So 2% is now the floor on inflation, which means that through the cycle, you are going to be higher. De facto, if 2% is your floor, you're going to end up higher. And so I think now if I look at the past year, you had, to be honest, every reason for inflation to be weak. Energy prices were very tame. You had a very strong dollar, super weak yen, super weak China. Uh, you know, other commodities outside of gold. So if you take your soft commodities, your copper, your nickel, etc., all that was really soft. Uh, and you had easy year-on-year comparisons. And with all of this, still you couldn't get back to 2%. So now, fast forward to 25, and what do I know? I know I'm getting massive stimulus in China, which I think does matter for things like commodities and just overall growth. I think as soon as the German election is behind us, you're going to get more stimulus in Europe and more rate cuts in Europe. You're going to get then you get to the question of what you get in the US. Do you get protectionism or not? If you get protectionism, that's inflationary. Do you get more fiscal pump priming by the Trump administration? If you do, that's inflationary. Um, so, I'm left wondering. You've got oil inventories at record lows. Everybody came into 25 thinking, oh, oil is going to keep going down, and it keeps grinding higher. So I don't know. And if by chance you have an end to the Russia-Ukraine war, then you're going to have all the reconstruction of Ukraine, which is going to be pushing commodities higher. So I don't know. I put it all together. I'm like, what's going to be the big deflationary force in the next year or two? And I now you could say, well, it's going to be China exporting all this excess supply, but remember, China's now stimulating its domestic consumption. Number one, and number two, we're talking of putting tariffs on this Chinese excess supply. So I don't know. Yeah, I am an inflationista. I have been, and I remain one.
So you're bullish on the U.S.
Um,
Is that
well, the U.S. is a massive economy, um, and I'm definitely bullish on U.S. value stocks. I'm very bullish on U.S. financials. Um, I'm not bullish on the market per se because I think the market in the U.S. is distorted by the extreme concentration that such as you've never seen. Um, it's or let me put it this way: if I was going to buy the U.S., I'd buy the equally weighted S&P 500 more than the market weighted. I don't want to have 6% of my portfolio in Nvidia and 6% of my portfolio in Microsoft and 6% in my portfolio in Apple. Apple that hasn't grown its sales for 4 years now. and that is trading at whatever it is, 35 times earnings for a company that's no longer growing, no, I'm not that interested in that. But beyond that, is the U.S. economy, is real estate going to do okay? I think it is. Are the banks going to, piggyback on the real estate doing better? I think they will, so on and so forth. But if you look around the world, I think there's way more attractive opportunities than the United States on a valuation basis and just on a fundamental basis. The U.S. today, mortgage rates are 7%, energy prices are creeping up, the U.S. dollar is very high, which is going to hurt corporate earnings. So, I'm not bearish the United States. I just think there's more attractive opportunities elsewhere.
Okay, so you just touched on interest rates and mortgage rates at 7%. And interest rates, in spite of what the Fed is trying to do, they've slashed the short term rates by, I believe, 100 basis points in the
You're
last
right,
three meetings.
100.
So they're doing
Yep.
everything they can to keep it down. But at the same time, you got the long end of the curve going up. I believe it was around 380 in September, and right now it's at 460, 470. It feels like it wants to go higher. But how do you interpret that? What do you think the 10 years trying to tell us?
Oh, I think you can make many scenarios. You start to see an acceleration in the sell-off in U.S. Treasuries post the presidential election result. So from there, you could say, okay, well, market's getting excited. Trump's going to make America great again. He's going to deregulate. He's going to cut taxes. So it's going to lead to a lot of growth. So I think that's one possible explanation. I'm not poo-pooing it, by the way. I'm like one explanation. I think there's another, because while U.S. bond yields have been shooting up, Chinese bond yields have been collapsing, which is highly unusual. Usually, they sort of move a little bit together at least, but for them to basically open up by 160 basis points in the space of a few weeks is simply unprecedented. So, I personally wonder to what extent, when Trump got elected, I don't know if it was Xi Jinping or Li Qiang or, the PBOC or whoever, telling CIC safe, who manages the Chinese reserves, but also telling the pension funds, etc. It's like, look, Trump's back in. He might bash us. He might not. Uh, who knows? But better be safe than sorry. Why keep so much exposure to U.S. Treasuries? Just start bringing the money home. And so, that could have been contributing to the sell-off and the rally on the other side. As you get a reallocation of a lot of Chinese flows, away from U.S. Treasuries. Because the reality is, if you're a foreigner, uh, you know, Trump might not be that compelling an investment proposition. I mean, you're Canadian. Did you expect, for Trump to come right out of the gate and bash Canada the way he has? Probably not. Um, and does that make you more likely or less likely to buy U.S. Treasuries? Now, if you're Canadian, you're probably thinking, well, I know I'm not going to get my money confiscated in the U.S., but what if you're Chinese? What if you're Qatari? What if you're from Bahrain? Do you feel the same? Do you feel that all of a sudden, if you're from Bahrain, and Trump wants something from you, he's going to beat you up until you give it to him? Could that involve me losing access to my treasuries? It seems like nothing is off the table, and so it's maybe it's just that simple. It's if you spit in foreigners' eyes, maybe foreigners are like, take their ball and go home.
So I want to
Because
ask you one more.
sorry, just on this, if you're a foreigner, if you're China, and you're a little worried about Trump is going to do to you, and you see it how he's treating Canada, if you're China, you think Canada and the U.S. are like this. They're like, big brother and little brother. They're like this tight. If he treats Canada like this, what's he going to do to me?
Yeah, very good point. So let me ask you about Canada, because I always like, when I speak to people throughout the world, I always want to get their view of or their perception of what's happening in Canada. I'm sure you've read there's a lot of turmoil going on right now with our federal government and also with our provincial governments. And it's like we have a vacuum here. There's no real leadership. What's your perception of, and just for the benefit of our viewers, the Prime Minister of Canada, Trudeau, Justin Trudeau. He has resigned. There's a leadership race going on, and I believe it's going to be in the month of March. We're going to get a new leader of the Liberal Party and a new prime minister. But what's your perception of what's
So,
happening in Canada?
so first, I don't know if I'm a great foreigner because my wife is Canadian and I have four Canadian kids who go to boarding school on Vancouver Island. Um, so so I do pay a lot of attention de facto to what happens in Canada. I do think most foreigners don't really care, to be honest, because it's never really been an issue, and Canadian politics aren't that interesting. Um, so no, you've mentioned, yeah, there's a vacuum today. I would argue there's been a vacuum for 10 years. Um, and you've had a lack of leadership. You look back at the past 10 years, what has been the big achievement of Trudeau? You had 10 years to build pipelines to free the oil from Alberta, go put it through BC, ship it on to China, ship it on to Japan or wherever else in the world. That didn't happen. Post Russian invasion of Ukraine, Olaf Scholz came to Canada, sat down with Trudeau and said, look, we desperately need your gas. We desperately need your oil. We'll build the terminals. We can build them quick. We'll pay for it all. We'll sign you 20-year deals. Like he was literally throwing money at Trudeau to, basically to get the gas that he needed. And now, this is Germany. This is a NATO ally who's at the early days of the war is in deep trouble because they've been so reliant on Russia. In essence, he comes and says, look, I've been reliant on Russia. That was a mistake. I now want to be reliant on you. And what does Trudeau do? He tells him to take a hike because of climate change. Now, the end result of all of this is that basically Canada has left itself completely dependent on the United States. It's done nothing in the past 10 years to basically reduce this dependency on the United States. And that is such a failure of leadership by Canada because you had a warning shot in 2016. Trump gets elected in 2016. He says, I'm going to tear NAFTA apart. And, he bitch slaps Canada around a little bit, but not too bad. On the back of this experience, Trudeau should have, said, okay, I got caught with my pants down here. Let's not have that happen again. Let's boost my trade with the EU. Let's boost my trade with Asia. He did absolutely none of that. Absolutely did none of the infrastructure spending that was necessary for this. Did none of that. And I think they just took it for granted that, Trump was just a bad dream and it won't happen again. And instead, here we are, boom. And now he's caught. It's not that he's caught with his pants down. He's caught with his pants off. He's just like, he's just being a nudist on the beach here. And so, no, you said we have a lack of leadership today. I would argue you've had it for 10 years. And hopefully that changes. It's the old story. If you're going to plant a tree, the best time to plant a tree was 20 years ago. The second best time is today. There's been a cruel lack of leadership in Canada for 10 years. But, hopefully that gets remedied soon.
Yes. And to your
Sorry if
point,
that
this
was
is what
sorry
happened.
if that was a little politically biased.
Oh, no, not at all. I wasn't expecting that. And I didn't realize you had relations to Canada. But this is what happens when you have a left leaning or socialist government who's more focused on using the right pronoun and sending gender advisors to the Ukraine than they are on building up the economy and creating a higher standard of living for its citizens.
To be
But
honest, I don't think it's even a left right wing thing. It's a virtue signaling because I think it's how perhaps the left has evolved because in France in 1981 when we elected Mitterrand, who was right wing, he was socialist, he powered ahead on the need to build nuclear power plants. He saw that as a comparative advantage for France and as a way to maintain France's geopolitical independence, essentially. And because energy, I in a lot of my work, I tend to say, look, energy is economic activity is energy transformed. Everything starts with energy. If you don't have an energy policy that makes sense, your economy is going to hit the wall at some point. And in the past, you have had left-wing governments that have energy policies that make sense. Because I think in the older days, actually, left-wing governments, a proper left-wing government would have said, okay, great, let's build a pipeline, job for the boys, job for the unions, uh, jobs for guys with, big tattoos, big arms, lunch boxes, hard hats. Like the left used to like these kind of things. They used to be all about it. And they've turned their back on those voters to, to embrace just virtue signaling and cloud cuckoo stuff. Now, fortunately, I think actually that the election of Trump, the reason why this time around the left in America isn't like up in arms against Trump is that I think half the left is actually almost relieved that this page is being turned on the virtue signaling, on the woke ridiculousness, and they can go back to being what they always were, a party defending the workers, and what they should be. You want, and I say this, I'm a very right-wing guy, but you want a left wing that defends workers, that defends, the infrastructure in your country, etc. You want that as a counterbalance. That's a healthy counterbalance. Because it doesn't divide society into an us against them kind of thing, like all the woke nonsense does.
Very good points. So, Louis, before we wrap it up, I just want to summarize a few of the points you made. So, first of all, you think the Chinese economy is turning around and it's on its way up. Things are definitely improving there. You still think things are fine in the US. The economy is still very strong, but you don't see any trouble there. But at the same time, you think there's better value in other parts of the world, like China. Do I have those points right?
Yeah, and I know a lot of people don't like China. There's like, oh, it's a communist regime, this, that, and the other, and long-term returns equities in China are poor, etc. There's lots of places where you get great value. Brazil right now is being given in the streets. You have great value in other parts of Asia. Now, if you're more of a growth guy, you've got great growth opportunities in India. So yeah, I still think it's an exciting world, and there's things to do in different places. I think the real big risk for the U.S. for everywhere, less so for Canada, but for everywhere, the real big risk is that energy prices continue to grind higher. Because I think most entrepreneurs, most households can take one punch. So if interest rates creep higher, we mentioned mortgage rates at 7%, people can take that punch. But if at the same time, filling up your car every week keeps on getting more expensive, and paying your heating fuel bill and paying your electricity bill, if those go up at the same time, then you get squeezed. Most people can take one punch. The second one knocks you out. And so today, for me, the big risk, like I said, I'm decently sanguine, but I fear that if we move from $75 oil to $100 oil, I'm talking in US dollars, then we move into a much more complicated world. So I continue to believe that having big energy positions, if only as a hedge, you have your energy positions, and if oil stays at 75, they're not going to do very much. If oil goes down to 50, then they're going to go down. But if oil goes down to 50, the rest of your portfolio will absolutely fly. So, it's how you build, you build a portfolio, knowing that not everything is going to do well, but you build some cushions in there. And today, the best cushion you can have is not government bonds. I'm not even sure it's gold anymore. I think the best cushion you can have is energy.
Well, that was a great discussion. It was very all encompassing, and I want to thank you for spending time with us today. If somebody would like to learn more about you and the services that your firm offers, where can they go?
Yeah, absolutely. So we're Hong Kong based. The easiest is to go to our website. It's called gavekal.com, Gavekal. We really do three things. We have a sort of independent research business for institutions. We have an institutional asset money management business, and we have a private wealth business. So feel free to go to our website. I also have, I'm on Twitter or X. My handle is Gav Vincent. I post every now and then, not all the time, but I'll post a paper that I write on there every now and then. So feel free to check me out there as well.
Louis, one final question about Hong Kong. You have lived there for many years now. What do you enjoy most about that city or that region of the world?
I think Hong Kong is, it's a super exciting city. It's a very easy city to live in. If you're into the outdoors, most people don't realize this, but there's beautiful beaches, amazing hiking. 15 minutes from my office, I can be in the middle of the jungle, hiking into just really beautiful scenery. So I definitely enjoy that. I enjoy the fact that it's super safe. As a parent of teenagers, it's living in a crime-free environment is very, very nice. And then as a businessman, to be honest, I enjoy the the minimal red tape, the fairly pro business, pro light regulatory touch government that we have in Hong Kong. So it's an easy place to run a business. It's an easy place to raise a family, um, and it's an easy place to escape from when you want to escape.
I'm going to have to check it out sometime. Once again,
Please do.
Louis, thank you.
Thank you very much.
Well, I hope you enjoyed that discussion with Louis Gave. As Louis mentioned, there's a lot happening throughout the world right now and a lot of turmoil. And if you need help in understanding how these events will impact your financial future, consider having a discussion with a vetted financial advisor at wealthion.com/free. It will only take a few minutes of your time, and there's no obligation whatsoever to work with any of these financial advisors. Once again, you can find out more information at wealthion.com/free. Thank you very much for being with us today, and I look forward to seeing you again soon.